Okay, okay. All right, permission to start now. Can I push? Can we start now? Uh, okay, let me start. Well, others will join while we continue. Okay. Now, we see. Okay. Okay. Now, on the second phase, okay, understanding how the candlestick formation works. Okay, I said before the first video cut, 4 hours is how we run our setup, right? Why the 1 hour is what we use in taking entries. Now, on the candlestick formation, okay, on the USD JPY, we saw that we found a wick and a bearish full body. Okay, that's a valid candlestick formation. Now, you need to understand that when we have a wick and a bearish candle, this 4 hours candle is 4 candles, okay? 4 candles that made up the four, okay? The four, each one candle each, okay? Like, how do I put it now? This 4 hours candle, okay? It's 4 separate candles put together to give us a 4 hour candle, okay? That I'm going to explain to us now. Right. Let's see. Brush. Okay. I'm going to just do this for us to be able to identify this candle. Okay. See. All right. Now, you can see my cursor, right? The cursor where I put in this blue brush tool I put on top of the wick and the 4 hours bearish candle. If you look beneath, you can see the time there. It's Friday, 13th December 2024, 6 a.m. in the morning. Okay. This is the 4 hours time frame. So now I'm going to take it back to the 1 hour time frame so we can now count to know that this 4 hours candle comprises of 4 separate candles each. Okay, so I'm going to go there. Let's take a look at 4 hours candle. Let's see, 4 hours candle. Now, 4 hours candle. Okay. Now, remember when I showed, okay, this blue line that I drawn on top. Okay, you can see beneath we still have the same date, Friday 13th December 2024, 6 a.m. Okay, now as I said, that 4 hours candle you saw, the 4 hours time frame comprises of 4 different candles. Now we're going to count it, okay, together. We have this candle, which is the 6 o'clock. That is the first candle inside the 4 hours candle. So this is one. That is 6 a.m. This is 7 a.m. This is 8 a.m. This is 9 a.m. So this 6 a.m. to 9 a.m., that's the 4 hours candle that formed the wick and the bearish 4 hours candle. Okay, so these 4 candles is that candle you saw with that wick and bearish candle. Okay, so I hope you understand. From the 4 hours candle, we have a candlestick formation which had a wick above and a bearish candle. Coming back to the 1 hour, we can now count the 4 candles which made up the wick and the bearish candle. Okay, so in the 1 hour time frame, we saw that this okay, these 4 candles, right? These 4 candles, right? You see here is what gave us the candlestick formation, the valid candlestick formation in the 4 hours time frame. Let's quickly look at that and see. Okay, so now this is it. Okay, you can see this is the whole candle that gave us the valid candlestick formation. So now we're going to go back to the 1 hour time frame. Okay, so we can move on, right? Okay, now the candlestick formation again. What we need to understand, okay? Sorry. Now, something again we need to understand about the candlestick formation. Now, on the second phase of my strategy, okay? The first step, okay? Now, for the second phase, right? One, we need to find if it's in an uptrend market, okay? If it's in an uptrend market, right? We are looking to sell the market. Anytime we see an uptrend market, okay, we are looking to sell the market. In any case, this happens, okay, that we want to sell this market, okay. First step, we need to find a wick okay? A wick, and a bearish candle. That's if we are selling this market, any market at all. We need to see a wick long like this and a bearish candle. We must make sure that the wick below is not longer than the one on top. It's also very, very important. We need to make sure the wick above is not shorter than the one below. The one on top must always be longer than the one below. Okay? All right? So that's the first step. We need to see a longer wick on top and a bearish body. That's the first step. On the second step, okay, we need to go to the 1 hour time frame. That's the second step of the second phase of my strategy. We need to go to the 1 hour. All right. Now we need to count. Okay, we know now that this is the 4 candles that made up the valid candlestick formation which we are looking for, right? Now the second step, after the 4 hours candle finish, we're expecting to be seeing a new candle, right? And that new candle will be 1 hour candle, right? Before we see second candle, third candle, fourth candle, which will give us 4 hours candle, right? So now if you look here, still on the second step on the second phase, right? If you look here, you can see that this 4 hours candle, right, comprised of this. The next candle is this candle, the green bar you see here. Now remember, it's an uptrend market. So we are looking to sell this market, okay? On the second step, after you see a candlestick formation, the next 1 hour candle that comes up, you can see clearly that we had a 1 hour candle, okay, which started after 9 o'clock. You can see down 9 a.m. The next candle started 10 a.m. Now, because we want to sell this market is an uptrend, so we're looking to sell it. We're expecting this green candle should be a bearish candle. We're supposed to be seeing a bearish candle in this green bar for us to sell this pair. But what happened? The 10 o'clock candle finished and gave us a green candlestick. Okay? We saw a green candlestick instead of a red candlestick. Now, you see sometimes on my chart, I put C1, R1, R2, C2, C4, C5, R6, all this. Now the R1 stands for rejection, which I'm sure we know. The C stands for continuation. In this pair, the green bar, because by right we're supposed to be selling, so a selling pair here, we're supposed to be seeing a continuation because it's supposed to be going down. We're supposed to be seeing a C1 here, but we saw a green bar. A C1 should be a bearish candle. Why a rejection is supposed to be a green candle? That's a bullish candle. That is what we got. We got a bullish candle, meaning the market is not ready to go down. Okay? So now we saw that the market, okay, gave us on a 1 hour time frame, okay? The market gave us a green 1 hour candle in the 10 a.m. candlestick, okay? The candle finished 10 a.m., right? That's a rejection. That's where you see me tell you on our charts that, okay, we saw a wick and a bearish candle. We wait for the next 1 hour mark for us to either see a potential R1 or C1 for us to either buy or sell the market. In this case, we have 1, 2, 3, 4. 9 a.m. gave us a 4 hours candle, okay? Now the next 10 a.m. candle finished in a green bar. And by right, we're supposed to be seeing a red bar, a bearish red bar for us to take it to the downside. But we saw a green bar, meaning the market does not want to go down yet, wants to go up. That is why on Friday, if you remember, I told us to buy the USD because the 1 hour candle, which finished 10 a.m., finished in a green bullish candle. That is why you saw we bought here. Okay, we bought at this level. Okay, we bought at this level here. We bought here after this green candle finished 10 a.m. By this 11 a.m. candle, we bought, okay, to the upside. That's what I was expecting the market to do on Friday. But you know, Fridays are always very dicey and always crazy. But the reason why I wanted us to take this trade and the reason why I told us to hold this trade till Monday is because this is the first candlestick formation of this pair. Okay, we went through the first phase, finished the first phase. This is the first candlestick formation in the second phase. That's why I told us to hold the trade. because this trade, except we are seeing maybe another 4 hours week and a bearish candle, and maybe we see the next one hour candle coming out as bearish, then we say, okay, the market has now maybe changing direction. Because at the moment we have here, okay, let's go to the 4 hours time. No, let's stick on this 1 hour time frame. Okay, let's see, there's a movement. Let's use this one. So now I would say here that this 4 hours candle, okay, let's use 4 hours so we can really understand clearly. Now, this 4 hours candle here, okay, I draw this all the time here, right? I tell us that the 4 hours candle, okay, here, the 4 hours candle here, okay, the 4 hours candle here is going to be an R1 because we saw the 1 hour candle finish in a bullish green candle. That is why I told us to buy at this level. I told us to buy at this level here. Okay, but at the moment you can see the market is going down. And did you notice something there? You can see on this 4 hours candle, what are we seeing? What are we seeing? We are seeing right now that we are seeing another, right? We are seeing another week. Okay, you can see another week and a bearish candle. So you can see the market or this strategy, okay, is a very, very, very good strategy. It can tell you when to get into a market and when to get out of the market, whether you are in loss or you're in profit. When you see there's a change of hands, you get out of the market immediately. That is why I told you this strategy, the banks use it all the time because it gives them a notification or it gives them cautions, okay? It tells them when to get out of the market. And when the market is in their favor, they stay. But when it's not in their favor, they're out. Okay, so now you can see we have a wick here and a bearish candle. This is a sign that there is a chance. There's a chance, a potential. Maybe we don't know because now we just see a wick and a bearish candle. And you can see the wick on top is longer than the one under. So this is a valid candlestick formation. This is the second valid candlestick formation now we are seeing here. Now, what we would suggest or what we'll be hoping for now is when the trade market opens up by 11 p.m. today, we should expect that 11 o'clock candle, which will open and finish by 12 a.m. in the morning. That candle needs to be a bullish candle. Why? Because we already have an R1, a rejection for the first candlestick formation that gave us 10 a.m. green bullish candle. That suggests that the market does not want to go down yet. It still wants to go up. Fine. That candle did not go up to our TP1 that I gave us in the VIP. Okay. Now we have another valid a week and a 4 hours bearish candle. Okay. So the next candle needs to come out green for us to have a potential R2. That's a rejection 2. As I say, anytime you have rejection 1 or rejection 2, that's a confirmation. We need to see 2. You might be wondering why that we saw rejection 1 and we took a buy. The reason why I took a buy on rejection 1, the reason is because that is the first candlestick formation on this pair. The first candlestick formation, you can take whether it is a buy or a sell. But after the first candlestick formation, you need to start looking for 2 candlestick formation for any valid entry. And that's what we are seeing right now. We have R1, which is a rejection 1. We need to see a rejection 2. Of course, we already have a wick and a bearish candle, 4 hours bearish candle. So the next 1 hour candle, which is opening 11 p.m., we need to see a green candlestick formation to validate this pair, this move to the upside. Okay, if we see an R2, our trade is still very much valid, meaning the market still wants to go up because it's still rejecting the downside. Okay, so expecting an R2 here for us to leave our trade to keep on going to the upside. Okay, so you can see how accurate and how good this strategy is. It tells you when the market is trying to change hands, and it tells you if the market is still in favor of your trade or your positions or order. You can see how good it is. Okay, so that is it on the uptrend. Okay, uptrend market for any pair at all, and this strategy works for any currency pair, any futures, any commodity, name it. It works for all of them, for Bitcoin, for stocks, for indices, whatever. As long the first phase, 1 to 5 steps, are working in favor of you, and the second phase starts with the 1 and 2 step doing what you want, you're good to go. Okay, so this strategy works for all, and that's why that is what the banks are using to make money. Of course, from us, yes, because they use our money to do all this while. Okay, so I'm going to be switching, okay, to the other one because this is an uptrend market. Okay, now I have made us understand how the uptrend market works. You see an uptrend, we're looking to buy, but if something happens along the way in the second phase, we will be buying more because there's a rejection, just as what the USDJPY is doing to us right now. Okay, so now what we are looking at here, okay, we want by 11 p.m. when market sessions are opened, okay, we want to see a green candlestick finish 12 a.m. so we can see more push to the upside. But mind you, if we see a bearish candlestick by 11 p.m. and finish bearish by 12 a.m., there's a problem. That's a sign that the market does not want to go up, okay? Wants to go down. That would force us, okay, that would force us to close our trades because the market is changing hands. So we need to close our trades to minimize loss. I say this to us in the VIP all the time, okay? To minimize loss. All right. So that's it for the USD in an uptrend market. Okay. So now I'm going to go towards the USD CHF in a downtrend market. Okay. So just 1 minute. Let me quickly go to USD CHF so I can explain that to us. On the USD CHF, okay. Just a moment. Let's see on the USD CHF. Okay. On the USD CHF. On the USD CHF, let's see. Okay. Let's take this out so we can really see what is happening here. Okay, let's see. Now this is the USD okay? I'm going to use this to, at least we have an idea, okay, of how we get our higher high, higher low situation in an uptrend, okay? So I'm going to use the same thing. I believe here you can understand, okay? On an uptrend, it's like a stairs. It's like going up, okay? Like upstairs, something like that, okay? Why in a downtrend, right now you can see on the USD CHF, we have a downtrend, okay? On an uptrend, we are having higher high, higher low, okay? Why in a downtrend, we are having lower high, okay? Lower high, okay? And lower low, okay? All right. We have lower high, which is the LH, and the lower low, which is the LL. Okay. So now I'm going to zoom in so we can really see, have a picture, a good picture of it. Okay. And you can look at this as downstairs. Yeah, something like that. You see, you can see the markets, look closely. Okay. From the lower high, okay, here, you can see the market came down here. That's one. Okay. You know what? Okay. From here, we had a lower high here. Okay, down to this place. Okay, that's the lower low. Let me increase this one so it can be bigger. Exactly. Okay. Put it bigger so we can see clearly. Okay. Now we saw the market from here. Okay, come down towards this level. Okay, towards this level. All right. Now you can see from here we saw the market pull up. Let's see. We saw the market from here pull up to this side. Okay, pull up to this side. Right, to give us another lower high. All right. Now we can see the market from here gave us a lower high. All right. And now you can see the market also gave us a lower high. Okay. And what happened? We see the market gave us another lower high, a lower low. Sorry, a lower low. Okay. Right. You can see it's like a downstairs kind of situation. Okay. You can see up, up, down, up, down, up, down. Right. It's a lower low. It's a mistake here. A lower low. Okay, so now you can see the market came down, went up, came down, went up, and came down, right? Just like the uptrend market. You can see we had two horizontal lines. Okay, we had two horizontal lines here. Okay, which in the uptrend markets, I said we need to put it on a higher high and a higher low, right? That's for the uptrend. Now, for the downtrend market, okay, we need to put one of the horizontal line at a lower high, okay, which is this one, which is this, okay, which we put here, okay, that's the lower high, right? And now the second horizontal line, we need to put it on the lower low, this one on the lower low here, okay? All right, we need to put it on the lower low, right? Lower high, lower low, okay? Now, you can see after we put the horizontal line, and as I said on the uptrend market, okay, when you see price move, okay, and breaks this horizontal line, okay, for the uptrend, we're looking to for a break of structure, okay? I explained that in the uptrend. We are doing that to get our break of structure. And the downtrend market, okay, the price had to fall, okay, had to fall from the lower high, crossed this line, this horizontal line, right, and gave us our break of structure, okay? But in the uptrend market, it had to cross higher to give us our break of structure. But in a downward trend, it needs to cross downward to give us our break of structure. You see the difference? On a higher high, the break of structure is on top. Why on the downtrend, the break of structure is down? Okay, because the market is going down. Okay, that's one. Okay, that we understand. Okay, so now we see our break of structure formed. Okay, now if our break of structure is formed, we need to see a change of character. This is still under the phase one of this my strategy. Okay, we need to have a change of character before we can be looking to start using our Fibonacci or anything of such. Okay, so now we have our break of structure which is formed after it passed the horizontal line below, okay, to give us break of structure, this one, okay, below. Now we need the market now to go up just as the uptrend market did. It had to come from up from the break of structure, had to come down, cross the higher low to give us a change of character, okay? But in the downward trend, we need to see break of structure. We need to see the market cross now. The price needs to cross. In fact, the lower high, the just a moment, the lower high needs to be lower low needs to be around this place because that is the lowest. Okay, all right, and this is supposed to be the break of structure. This area, all right. So this area, because this is the lowest. Here is not the lowest. Here is the lowest. So here is supposed to be the lower low and the break of structure. Okay, so we need to move this one towards this level. Okay, all right. So now we want the price to move up, just as for the uptrend, right? We saw the price move from the break of structure down, cross the horizontal line below to give us a change of character. In this case, same scenario. We want to see price move from the break of structure up to cross the lower high and give us a change of character at this level. Okay, but at the moment you can see the market is still moving. Okay, it's still moving. You can see the market is still very much here. Okay, you can see the market is still very much at this level here. Okay, the market is still moving towards this upside. We want to see the market come towards the side. Okay, so the USD is still in the first phase, it's still materializing. So we need to wait and see that it goes slowly or fast, whatever, anyhow it wants to go to that area for us to start looking to use our Fibonacci. Remember, on the uptrend, the fifth step, okay, for the first phase is using the Fibonacci retracement to draw our break of structure from the low this time to the high of the change of character. Remember, on the uptrend, we had to draw from the high down to the low. Okay? All right? So now we have to see, okay, that now the break of structure has been formed. Okay, now you can see it's moving towards the upside. Okay, now we are still yet to see the market move towards a change of character, which will happen in maybe this week, hopefully. USD JPY took us almost 1 month before we saw a change of character formed. Okay, so in the USD CHF, I hope and believe that this week we see the market push upward towards the change of character. Okay, so that we can now use our 5-step, okay, 5-step of the first phase. We'll apply it here on this downward market, okay? But we're still going to push through, okay? I'm still going to push it here, all right? So now let me quickly run that so we can see, okay? Now we are going to assume, all right, that the market, okay, got to this area, okay? Let's assume the market got to this area, okay? So now we need to be drawing our Fibonacci retracement tool. That's the 5-step on the first phase, remember. So now we're going to go to our retracement tool. And the uptrend market, we drew our Fibonacci from the BOS break of structure, which is from the upside to the downside, from the high to the low. But the downtrend market, we are taking it from the low, which is here. Okay, the low is here. The low is here, okay, to the high of the change of character. Okay. And also remember, I used to say on the uptrend, on an uptrend market, we're looking to sell the market. Why in a downtrend market, we're looking to buy the market. Okay. So now the market is going up. So we want to see the market price come down towards the 0.5, okay, and 0.618 area. Now, as I said, we are assuming the market has already gotten to the change of character here, okay? Now, we need the market. You can see this arrow that I drew here, right? Now, we need the market, okay, to come down. Okay, let me use this arrow here, okay? We need the market to come down from here, okay, from the change of character. We need the price to come down towards this area. Okay, we need the market to come towards this area, okay? The 0.5, 0.618 area, this area, okay? We need to see the market come towards this area, right? Fantastic. So now we are still very much in USD here. We're still very much in the first phase, okay? We're still very much in the first phase of USD CHF. So I've just explained how the market gets to the change of character. I'm drawing our Fibonacci retracement tool, and the market needs to the market price needs to come down to the 0.5, 0.618 area for us to get to the next phase, which is the second phase, which is the most important phase. Okay, but in this case now on downward trend, because we are looking to buy the market, okay, we are not looking for a weak and a bearish candle this time. We are looking for a weak and a bullish candle. Okay, for example, I'm going to show you a bullish candle real quick so we can push on. Let's quickly look for a bullish. Okay, great. This is one bullish candle. Okay, so we are looking for something like this. Okay, we're looking for a bullish candle just like this. Exactly. We want to say something like that is after the change of character as the price has moved towards the 0.5, 0.618. We want to see a valid candlestick formation. That's for the second phase. We need to be seeing a candlestick formation like this, a wick like this, but this time the wick needs to come from below. Okay. So just a moment. Let me. Okay. Let's see. Okay, the wick needs to come from below. Okay, this is a good one. Okay, the wick needs to come from below like this. Okay, not from above this time. Okay, the wick needs to come from here. Okay, and we have a bullish candle this way. All right, and remember on the uptrend side, we say the wick, because it's the selling side, the wick needs to be higher on the top and the bearish body. Okay, but in this case, in a downward trend, we need to see the wick below needs to be longer than the one on top with a full bearish body, full bullish body. Sorry, for the downtrend market. So this is what we'll be looking at, okay, when we are in the second phase of USD CHF, because it's in a downward trend. Okay, so I think I've been able to try to explain an uptrend move market and a downtrend move market and how the candlestick formation work. Any question from this? Can you tell me any question, please? Let's push. Any question? Any question, or should I move on? Any question? Any question? Any question here? Okay, so we move on. Okay, so okay, let's see. All right, so now that's for the downward trend for the USD CHF. Okay, we are still waiting for USD CHF to keep on actualizing for us to get to the second phase of AMI strategy. Okay, so now I'm going to quickly explain very fast for the GBP AUD. Okay, last week we took an entry. Okay, for the GBP AUD, right? The GBP AUD, we saw that. I told us to take an entry for the bullish side because this market is in a downward trend. Okay, you can see clearly that we had lower high, lower lows here. Okay, you can see the market gave us lower highs, lower low. Okay, up, down, up, down, up, down, gave us a break of structure, which we saw the market price went up to create a change of character at this level. Okay, and we took entries from here since October. We've been taking entries from here down to November, which we still kept on taking entries. We've been doing good, and we saw the market push further to this area. Now, the reason why I told us to get out of the market, okay, was because if you see on this downward trend, okay, in the downward trend, we're looking to buy the market, and we have an initial take profit, an overall initial take profit, which is at this red line, the minus 0.272, this area here, okay, this area here, right? And if you look closely, you can see the market has already gotten to that level, which is here, okay? You can see we had the market finish here. So that's the conclusion. So now the GBP-AUD is no longer in our radar anymore because it has gotten to the overall take profit. That is why I told us to get out of the pair immediately because the market has finished what we wanted to do. That's for the GBP-AUD. Okay, so the GBP-AUD now, we're not going to be looking at that again, except we see a restart. Okay, from the first phase down to the second phase, then we push for entries. Okay, that's the only way we'll be working on GBP-AUD. So for now, GBP-AUD is no longer on our radar, so we're going to leave GBP-AUD alone for it to continue doing whatever it's doing. Okay, so the pairs which we'll still be looking at for this week, we have the CHF-JPY. Okay, CHF-JPY is still playing around. We had a restart at this level, which we believe we are going to be seeing. Okay, great. We have, oh, fantastic. CHF-JPY is already giving us a candlestick formation. Okay, we can see a wick and a bearish body here. So CHF-JPY is one in line, I'm sure, for this week entry. Okay, so hopefully by 11 p.m. when our market session opens, we should be expecting bullish or a bearish in this pair. But don't forget, okay, we had a first bearish wick and a bearish body here. So we should be expecting two candlestick formation in this pair for us to be looking for an entry. That's for the CHF-JPY. Now for the gold, our strategy opened up for us that the market for gold will keep on falling, and which it did. Okay, you can see gold still getting very weak. We had a C1 here, we had a C2, we had a C3, we had a C4, we had a C5. Okay, gold is still very much weak, so we should still expect market to come and close the TP2 and maybe get to the TP3, hopefully. Okay, so gold is still what we're looking at for this week. All right, what again? We're looking at the USD ZAR. USD ZAR is kind of funny. We should expect the market going up because clearly you can see we had an R5. Okay, now we have an R6. Okay, an R6 because this pair, okay, was okay, it's a higher high, so we're looking to sell this market. We saw an R5, that's a rejection, meaning the market does not want to go down, right? It wants to keep on going up. So we had an R6, that's the second candlestick formation, which should mean the market wants to keep on going up, which we took a buy here, but the market keep on playing around, but we wait and see what the market would start up in this third week of December. Okay, so we hold on this pair and see how the market plays out, and we cross our fingers and see how it goes. The UNZD, we also took a sell on this, or we took a sell on this pair because we saw an R6 and R7. Okay, so we wait and see what the market does here. Okay, so I think that's that for this Zoom session. If there's any question you could ask, we have like 3 minutes left on our clock for us to finish this Zoom session. If there's any question you want to drop, you can please drop it now. Okay, tell me any question, anything you need to know, so I could explain. Okay, and there is no need to worry. It's recorded, so we'll have a copy of it. I'll be putting it on YouTube, so we could go there and watch it again to really understand what I said from the beginning to the end on both videos. Okay, so any question? Any question, my people? Any question? Anyone? Any question? Talk to me, guys. We have 2 minutes left for us to finalize this video. Okay, this session. Any question from us? Any question? Any question, please? Any question, guys? Any question from us? Any question? I think we're good. Any question from us? Okay, so I think we are fine. If I think no one is asking any question, I think we are all good. So I think I'll be coming to a conclusion of this Zoom session. Okay, we'll be having more of this in more sessions like this in the coming days, mostly weekends. So I think that's that. Kcfx got you all the time, always, which we know that. So I think that's all for us. Um, Good evening and happy holidays and Merry Christmas in advance. Okay, so guys, I think that's it. That'll be all from Kcfx. See you guys around. Bye, guys.